Hey, everybody. Welcome back to the Be Your Own Bank podcast. It's that time of the week, the weekly roundup.
Hey, guys. Welcome back. Thanks for tuning in. This week, I've got something special for you. I'm going to show you how to become a millionaire.
What?
In 20 years' time.
Double what?
Without your own money.
Triple what?
That's right. Triple what? So that's number one on the docket. Second, we're going to define what proof of stake is, what staking really means, and how that's going to affect cryptocurrency going forward, especially with Ethereum. And finally, we're going to talk to you about how Chipotle and Subway have now entered the Metaverse. So first up, how do you become a millionaire? Easy. It starts with something called a balance transfer.
Yes.
That's right. So I personally have access to $15,000 from my credit card company for 21 months at 0% interest.
Okay. So balance transfer is your bank saying you have this amount of credit. We're going to allow you to take that credit out in the form of US dollars. So now you're going to max out your credit card, but you're going to have that $15,000 in cash, and it's the bank's money. Correct?
The bank's money. Well, the credit card company's money. Yep. And I only have to pay 3% interest up front. So $450 gets me access to $15,000 for 21 months interest free. So let's take that, for example. So if I have that $15,000 now in my bank account and it takes, a couple weeks to get it deposited.
Nope, not true.
It doesn't?
It takes days.
Days?
Yeah.
Oh,
in most cases.
Okay. Well, that's good. So a couple days, I have $15,000. Now, what I can do is I can trade that for a stable coin, UST to be specific, could be USDC as well. There are a lot of other things you can do with that, but I'm going to use the example of USD, which is Terra Luna's stable coin. We've talked about it. Utilizing that on Anchor Protocol, 19.4% interest. I can take that $15,000 and in about 2 years' time, I'll make $7,000 in interest. So I pay $450 up front. Pay my minimums every month for 21 months. And now that $15,000 is $22,000.
Okay. So, but just let's be clear, at the end of that 21 months, you've been making your minimum payments on $15,000, which is maybe a couple $100.
Yep.
Not even. It'll be less than that. But at the end of the 21 months, you got to pay that in full. Or you will accrue all of that interest at 22%, 24%.
Yep.
So it's totally pointless if you don't make your final payment in full. But you now have a surplus of $7,000.
So I have a surplus of $7,000. All I have to do is, maybe a week or two before that time frame is up, that 21 months is up, I just take that original $15,000 out, cash it out for real cold hard cash, pay off my credit card. All right. Now the credit card company's fine. And I've made just about $7,000 off of their money.
Did you hear that? $7,000 of the bank's money is now your money. That doesn't happen.
No, because if I took that same $15,000 and put it in a savings account of my own money, I would make nothing in 2 years.
Well, and remember, you paid $450 to get access to this $15,000. So your net loss at that point.
That's true.
So technically $6,500 is what you've netted, right?
Yeah, we can say $6,500.
Okay.
That's fair. I'll just calculate a little bit differently here.
Sure, but it's about the same.
Yep. Okay, now we're going to take that $6,500, all right, and we're going to assume that we're taking out another balance transfer. Okay, another $15,000. We're going to keep doing that every 2 years. For 20 years. So 9 more balance transfers. Okay. And that's going to equate to, we'll just say safely, $250 a month in interest if we keep putting it into that same protocol.
Yeah.
And if it maintains that 19.5%.
Sure.
Now, of course, that can change. The interest rate can change. But that being said, there are a lot of other decentralized finance platforms that are offering the same, if not more. Tron just announced that in the next couple weeks, they're going to issue their own stable coin called USDD, and they're offering 30% interest on that.
What?
30% interest.
30% interest?
40%, yeah.
Wow.
I know.
That's huge.
It's incredible. I mean, I don't know how they can do that.
Yeah, we got to do our research.
We'll do our research on that. But okay, so we'll take $6,500, and assuming that we keep doing balance transfers for the next 20 years, we're going to add in an extra $250 a month. And if it's not that much, we can just add a little bit from our own coffers. We're going to look at that over 20 years. And our interest rate will maintain at 19.5%. Compounded daily. It actually compounds more than that, but this calculator can't comprehend that. So we'll compound it daily.
Does not compute.
And in 20 years' time, your initial contribution will be $66,500, but the interest earned will be over $1 million.
$66,500 of the bank's money. None of your money
will now turn into over $1 million
because you had $15,000 worth of credit.
Yep.
On one credit card. Imagine if you were somebody who I have no idea who would be like, who has multiple credit cards, who does this on a consistent basis. And that's real money, and there's no effort other than setting your, auto payment, which every credit card has now.
Yep.
Make sure you do that. You don't want to be late because all the numbers change if that's the case. So as long as you do your due diligence and you set up your auto pay and you make your final payment, that's free money and it's compounded. So even if you're not making 20%, it's still free money.
Free money. And even if you don't want to wait 20 years, that money is accessible. You don't have to wait till you're 59 and a half. It isn't a 401k. It's just an investment account.
Correct.
And if you just want to do it for 2 years or 1 year, you can do that and pay it back because you're still going to have the principal. I mean, even if you did it for a year, you're going to have enough for a vacation.
Absolutely.
You could literally just utilize that for a vacation.
Mm-hmm.
It's incredible. And that's $1 million in 20 years.
And you get the junk mail all the time and you throw it away. But it says 18 months, 0% balance transfer. So you're paying 0% interest as opposed to the typical 20+%.
16 to 20, yep.
More, it's always 20 something.
Well, mine's 16, but...
Well, you're great.
I'm great.
They love you. Bank of America loves you.
They love me.
But that's what I'm saying is if you take advantage of what they're trying to offer you, you can make money off of free money.
Yeah. Well, and people are like, oh, well, I need $1 million to retire. Imagine working 40 years and hoping your 401k goes up to $1 million. This is 20 years. And if the interest rate stays the same, I can guarantee using math, that I'm going to be a millionaire.
Well, and there's nothing to say that you couldn't take the money that you were investing other places and put that in.
You can do that too.
Like the stock market, 6 to 10% is pretty average for return on investment. Why would you bet on stocks if you can get 20% on stable coins?
Right. Why would you bet on stocks that will fluctuate in value when you can bet on stable coins that won't?
Exactly. And you still get that compound interest.
Mm-hmm. Compounded minute to minute, not daily.
Second to second.
Yeah.
The ticker goes up. It's awesome because there's decimal points that don't exist.
It's true. There you have hundredths and thousandths of pennies.
Yeah.
Yep. All right, enough about that. Moving on, our crypto term of the week is proof of stake. So we talked about last week how Ethereum is moving to proof of stake. We want to kind of dive into this a little bit, explain it in more general terms. What does that mean? Why is that helpful?
And what is staking?
What is staking? Right. Yeah, I feel like a lot of people, because now on Coinbase, you can stake. And what does that mean? And are you actually staking on Coinbase?
I'm really hungry now, so continue.
All right, let me continue. So what we started with Bitcoin is something called proof of work.
Let's back up a little bit before that, right?
Okay.
So just for the complete newbies, right, is that you have what is a blockchain, right? A blockchain is basically a database that stores transaction data. So if I want to sell a product to you and you want to pay me for that product, you will send me a transaction in crypto. That is verified by computers on the blockchain. Similarly, if it's Bitcoin that we're using, Bitcoin, the computers that are mining Bitcoin, that is just a transaction between me and you.
Yep.
And once that transaction is agreed upon by the computers, a little small piece of Bitcoin is released to the person who verified that transaction. And now it is locked on the blockchain forever.
Yep. The verified transaction is solidified on this cloud ledger of transactions forever. It's solidified. And
when it comes to Bitcoin, it's proof of work.
Proof of work, because you're proving that something is happening by work being done.
Correct.
So these computers are doing work and they are proving that a transaction is taking place. The problem with that inherently is there's a lot of wasted energy, because let's take an example. Let's say there's 10 computers working to try to solve a block of transactions, verify a block of transactions. Only one of them is going to win. It's competitive. So 10 of them are working really hard, using a lot of electricity, but only one of them is going to mine and solve that block. And so the other 9 are just wasting energy.
Right.
And so you take that to a grand scale of millions of computers, tens of millions of computers, there's still only one that's going to have to put all of its energy into solving it. And there's only going to be one that's going to win that set of transactions and get the new Bitcoin. We'll take the example of 10. There's 10 computers working for that one golden ticket. And every 10 minutes or so, there's a new golden ticket that they're working for. But the problem is, the longer Bitcoin exists, the more miners are in the game and the harder it is to get that golden ticket. So people have to keep buying more chocolate bars. They have to keep buying more computers to try to compete for these transactions. And so now we move to proof of stake. And one of the big things that proof of stake solves is this problem with so much wasted energy. So much wasted energy, because instead of it being total competition, there is more cooperation going on. So instead of, one person winning that block of transactions and getting the new Bitcoin, it's with Ethereum's new upgrade, it'll be 128.
Oh, okay.
Okay. And they'll share in those rewards.
Okay. So instead of it being like, if we're thinking about it from like a gold brick, right? You've got all 10 people trying to mine this gold brick, and whoever gets the last, axe pick and finds that gold brick is the one who gets the gold brick,
right?
As opposed to proof of stake, where everybody's working on the gold brick, or 128, right?
Yeah.
And each one of those will get a 128th of that brick once it has been mined.
Right. And with Bitcoin, proof of work, it's not random. It's whoever has the biggest mining tool, whoever has the most power, is going to increase their odds of making more money.
Right.
Whereas with Ethereum, it's random. So the winner is selected at random, and over time, everyone wins because of the law of averages.
So it's not as much wasted electricity.
Right.
There's not as many components that go into it.
Mm-hmm.
There's not, the algorithm itself doesn't become more difficult, so you have to buy more and consume more.
Right.
You are collaborating in a sense and making it more efficient, as well as more secure, because you are staking your assets in order to be one of these validators.
Right. And I think that's a really good point. So that's where the term stake comes in. So we have work, we understand what that means, but what's stake? So stake in proof of stake just stands for the fact that in order to have privilege on the blockchain, on the network, to validate transactions, you have to add a stake. You have to put your stake in. And for example, because there's a lot of different nuances between blockchains, we're going to stick with Ethereum. Ethereum's stake necessary to be a validator is 32 Ethereum.
That's a lot.
That's a lot of money, right? So you take 32 times $3,000 a coin.
Yeah.
What is that, $90,000?
Yeah.
Okay. So that's the minimum. The thought behind that is, if you are risking, there's a little bit of risk involved. If you are willing to put up that amount of money, you're probably not going to work against yourself in the sense of trying to manipulate the blockchain
or hack the system,
because you would only be hurting yourself.
Yeah, especially if you've got 32 Ether and the price goes down because there was a hack.
Right.
You're going to be directly involved in losing money.
Right. And so proof of stake adds that next level of security because everybody involved in making sure these transactions are happening have a vested interest, a legitimate vested interest in the success of the system.
Right.
Whereas with Bitcoin mining, sure, they want to make money, but someone could want to make a quick buck, try to do something shady because they don't have a vested interest. You don't have to stake anything to mine Bitcoin.
Right. Well,
you just have to have a computer.
Yeah, exactly. You don't have to have Bitcoin to get Bitcoin. Whereas with staking, you have to have that to get that. Right. Now, caveat, there is something called a pool, right? A staking pool.
Yep.
Maybe you've heard of that. And there's mining pools too. But a staking pool is basically the idea is instead of you having to have 32 Ether, maybe you have 0.5 Ether, right? But there's also 64 people who have 0.5 Ether. And so now you're going to go in on a validator, if you will, with these other 64 people, and then you'll share the reward from that validation.
Which is great because you don't have to have as much at stake and you don't have to have as high of an investment. That's a lot of people don't have that money.
No.
And so it allows the average investor to reap the benefits of interest on their investment without having to have so much money invested. And so that's what Coinbase and Kraken and some of these other crypto.com they're offering is they will pool all your money together and they'll run the nodes, they'll run the validators, and then they'll take their cut, of course.
Yep.
Because their risk is, they have to pay the electricity bill, they have to build the infrastructure, but then they'll just pay you to stake with them.
But that's a win-win for everybody in that case, because then you don't have to have those 32 Ether and you trust a platform like Kraken, which I do, and you have access to your funds immediately. Ether's different when it comes to staking because we aren't in 2.0 yet, but once 2.0 is available, then you'll be able to get your funds out at any point in time. All the other staking assets that they have, you can take them out at any point in time. So it's access to your funds, but also an investment strategy. So the pool is the best way to go unless, I guess, you're rich.
Right. But the other thing to keep in mind about staking that maybe people don't understand, and I want to draw a parallel here, is when you look at the stock market, there isn't proof of stake in the stock market. Sure, you can earn dividends, but it's not the same thing because your dividends are paid out in US dollars. But with proof of stake, imagine that you own a share of Starbucks and just by owning it, you earn more shares of Starbucks.
Yeah.
You don't get that. You can buy more with your dividends, but it's not the same thing. With proof of stake, you're not getting paid in US dollars. Your 1 to 5% Ethereum that you're earning in staking is not paid out in US dollars. You're earning more Ethereum.
Right, which appreciates in value.
Yes.
And now you are compounding your interest in a cryptocurrency by staking.
Well, you're double compounding because Ethereum is going up X% and you're earning X%. So it compounds the compounding.
Yeah, that's true.
Yeah. It's crazy.
Crazy
of course,
good.
Crazy good. Of course, you have to pay taxes on that, and we'll do a tax segment at some point. But that's kind of the gist of what proof of stake is. Very complicated. However, it is where a lot of these currencies are going, and it is where Ethereum needs to go to stay competitive. Finally, we got to talk to you guys about Subway, Chipotle, and the Metaverse. So Chipotle just got into the play to earn space, and what they offered players in the Metaverse was if you played this sort of Wrap a Burrito Diner Dash game, you would earn points that then could be redeemed for actual food in real life.
Okay, so you can get you can get virtual diarrhea, and then that leads to real diarrhea.
And then that leads to real diarrhea.
Okay.
Yeah.
All right. That makes sense.
And then they also had a Halloween event where you had to go through this maze in Roblox. They were partnered with Roblox, and you have to go through this maze, and then you could earn a burrito.
You get a code for a burrito, and it actually led to their highest digital sales day in history.
That is absurd.
So that means that's a lot of chips and guac.
I'm sure that was extra.
Well, that's what I'm saying.
Yeah.
Is that you get a free burrito, but you're going to buy the extras.
You're going to upgrade to the chips.
So
and
that's
the guac.
how they're.
Yeah.
I mean, they're not having the highest sales day with free burritos.
No. But I mean, do you think they made the maze hard so that some people just feel bad and just go and buy a burrito?
No, but we're marketing in the metaverse now. That's what it is. Is they knew they were going to give away some free burritos, but it led to the highest digital sales day. So that's a good marketing play and play to earn. Right?
It is. Yeah. It's definitely plays on the play to earn.
So if you're making burritos and getting free burritos, then they're capitalizing on this new market. And they even did a 90s themed where they were giving away things. That was for the Halloween event? I don't know if it was for that specific event, but they were giving Roblox players Chipotle uniforms they could unlock. Cool, right?
That's pretty sweet.
Well, and what's even sweeter is the names of these. So you could unlock Chipotle Guacman, Chipotle Foil Fanny Pack, Chipotle Cheese Frosted Tips, Chipotle Spoon Shades, Chipotle Pepper Choker, Doodle Bandana, and Chipotle Pepper Tie-Dye Shirt. I mean, I know you don't know what the 90s were, but
I don't, but I do want a tie-dye shirt for my Roblox character. Yeah, I mean, it goes with the times. It's ridiculous, but this is where we're going.
This is evolving. We're evolving.
Yeah. And I mean, what is it? 66% of Americans are gamers, so it makes sense that they're targeting them. Also, I just learned that Subway, I don't know if Subway's necessarily affiliated, but there are some people that are working at Metaverse Subway. There's a guy, he's claiming that he's making $15 an hour in Metaverse virtual Subway, making you a virtual Italian urban cheese sandwich.
Wait, what?
Yes.
Wait.
So you put your Oculus on,
yeah.
You go into Metaverse Subway. I don't even know if you have to open the door. You probably just jump through the glass or something, fly in there. And there's a Subway artist there,
Sandwich artist,
pointing to the virtual menu, like, what do you want?
But wait, you order the sandwich at Subway in the Metaverse.
And supposedly it's supposed to equate to someone making you one in real life, and you can pick it up or have it delivered.
So
that's what they're claiming.
I'm paying for a virtual sandwich, and it's manifesting itself as a real sandwich, and somebody's delivering it to me?
Doesn't make any sense.
No, it doesn't.
Well, and this guy's claiming he's making $15 an hour. That's like getting double paid. I don't get it.
It's crazy.
But it adds a whole new meaning to work from home.
Yikes. I hope he washes his hands, though. That's the only thing.
I hope so, too. Yeah.
That's if they don't wash it, like when you go into Subway and they're like, they just grab the new pair of gloves and you're like, I think you're supposed to wash your hands, sir.
Yeah.
But you never say anything.
You never say anything. No. But I wonder if he still has to wear the visor at home, too. But I feel like that would get in the way
of his
Oculus. Yeah.
For sure.
So, yeah, this is the world we live in now, folks.
Get in the Metaverse. Get a Subway sandwich. Not sponsored by Subway. That's the roundup. All right, let's take a look at those charts. All right, let's take a look at Bitcoin. Right now, we are just under 40K, 39.7. You can see we are still grinding on the bottom of this bearish flag. I believe a big move is coming shortly. The month of April is almost done. If we do move to the downside, we can use the flagpole here to look for some targets. This says 25 is a possibility. If we can stay above this 40K and start to grind back up, resistance right around 50. If we can surpass 50, that would pique my interest for some more bullish trades. You can see down here the relative strength index, the RSI. This measures the overbought and oversold conditions. Right now, it's about 40. That means that it's more oversold than overbought. If we can cross back over the 50 on the RSI, that would be an inclination of more buying pressure. But if I'm being honest, it's not looking great at the moment. And May is statistically not a great month for investing. If we look at the other chart, you can see the same thing. We keep playing on this support level, which is good, but if it does get compromised, it could be a free fall to 30, 25K. But as of now, we are maintaining this huge bull flag. Patience is the key. We say it all the time. If we take a look at total market cap, same thing. Support, support, support. Hopefully we can hold support. If we do, chances of getting back to the 2 trillion mark are pretty good. All right, let's take a look at dollar cost averaging for this week. We've got TRX, Tron. We just talked about it. They're developing a new stable coin. That could be the reason why it pumped the other day. So we did get a volume spike on Tron. It is pretty close to the bottom here, right at 6.7 cents. It'll be interesting to see what their new platform looks like. Next, we have Lisk. We had a volume spike on Lisk the other day. Lisk is at 226, close to the lows for about a year. I think Lisk is ready to move soon. And lastly, Dash. Dash is hovering around the lows at $103. I think that's a heck of a deal. It also has a relatively low market cap of the big dogs. Dash has been around for a while, fast transactions, and Dash is going to make a move soon too. That's it for the charts, gang. We are the Bit Bros. Remember, we are not licensed financial advisors. All content is intended for educational purposes only. Please do your own research and only risk what you're willing to lose. We'll see you next week.
Don't forget to like and subscribe on YouTube, and you can check us out on Spotify and Apple Podcasts. Thanks for tuning in. We'll see you next week.